Hey, good morning, good afternoon. Hope everyone is well wherever you are. This is my first ever $80,000 portfolio review, so I'm very excited to do this today. And if there's any feedback, then please stick it in the comments. I'll be posting this in an hour or two. So what have we got here? So these percentages here, these have come down on Friday, but overall I'm very excited about these trades. Only risked about 1.8 of total capital on these trades. So as is part of my rules, I only ever put around 3% of my total folio into any one trade. This is very important as we don't want to, if a stock collapses overnight, we don't lose our entire folio and we live to fight another day. So it's very important. So when we put 3% of our total capital, so you have, $100,000 and you just want to put in $3,000, then that's 3% of your total capital. But the stop loss are set to 20%, so you're really only risking 0.6% of your total capital. We say total risk because when you put in 3% of your total folio into a trade, there is a very, very small possibility that you might lose everything on that trade. Some bad news comes out, something terrible happens to the company, there's a scandal, whatever. There's accounting mismanagement a la Enron style. So you could lose all of that money in one trade, let's be honest. And nobody, despite what all the gurus might tell you, nobody knows what's going to happen to a stock. I don't know, you don't know, nobody knows. Tom Lee doesn't know, nobody knows. So people making wild predictions on YouTube to sort of get your clicks is complete bullshit, and you just need to know that straight off the bat. It's very important. So we put in 3% of our total folios, which means that if you lose it all, then you don't cry and you can put on another trade the next day and we're all good. But with my strategy, you put on 3% and you have on entry a 20% stop loss. I like to have a 20% because you like to give it air to breathe, and as the stock climbs, then you can tighten up those stop losses into those natural support lines. So that's what I do. So these I've got 4 trades here. We'll talk about BMNR in another video that I'm going to put together. But CGM, IHRT and VRCA all got put in last week, and I'm super pumped with them. I'm trying a new strategy just now, which I've kind of been refining. And part of being a great trader is, reviewing your mistakes and looking at things you could be doing better. And that's what I've been doing over the last sort of few years. And if we go into CGM first, I'll just run you through it, and then maybe we'll look at some more trades, maybe find some trades, and also look at, I have a watch list here. We're in Trade Vision, there's a bit of software here. I think it's a free trial, but it's like $120 a year, and it's insane value. It's so good, so I absolutely love it. I think the UI is kind of okay. It's not flawless, but it's pretty bloody good. It's better than Thinkorswim, that's for sure, which is horrendous. So we'll go through my watching list later, but this is my folio just now, and let's have a look at CGM. So CGM, I don't really care what a stock's fundamentals are. I don't really give a toss. I couldn't tell you what they do. I mean, it's a pharmaceuticals company, it tells you up here, but I'm only interested in 3 things: the chart, the volume, and the RSI down here. And I'll take you through all of these just so you get a kind of grasp of it. So I like this stock because what my cookie cutter approach is, I like stocks that have suddenly turned upwards and that have been in the dumps for years, months, if not years. So let me show you. If I zoom right out, and I'll show you what I mean by that. So CGM has been tanking for however very long it is. I mean, it was way up at, what are we calling it here, $29, and now it's spent the whole of 24 and 25 basically tanking. And I like this, and this is the whatever it is, it's the 100-day, 200-day moving average. And you can see that when these sort of collide, it's impending death downwards. When you're 20 and you're 50, is it? When you're 20 and you're 50, you're heading downwards, and this starts to tank, then you know it's time to get out, right? I mean, this was, again, a sort of similar pattern over here where it's starting to turn, And you can ride that wave up to here, or you can get out here, whatever you want to do. You can hang on to it if it's not collapsing. And this insanely explosive price. I mean, it's hard to time the market, but anyway. So this stock has been way up for not a long time. It's been collapsing, doing nothing. But it's suddenly turned here, and the 20 and the 50 have crossed the 200, which I really like. And you can see maybe they've had a good earnings, yep, 16% over analyst expectations, and the volume here has been, you can see up here, the volume as you scroll across the volume bars here, it's looking like, what is it, 600,000, and then suddenly someone drops 5 million at, what was the price? So 10. So basically someone's dropped 50 million on the company here, and they know something, right? They're not buying it because they don't know anything and they've just got $50 million sitting in their pocket. They're thinking, what random stock can I drop this on? Somebody knows something. So average volume price is around 500,000, and someone comes in and drops a 10x volume spike. Now, inevitably, what I've been doing in the past is I have basically bought here. I've gone, oh, it's a spike, I'm going to buy in. But then you've got 1, 2, 3, 4, 5 down days after that. So what I was usually doing was I was getting in here and I'd have 5 down days, thinking, oh, is it going to keep tanking and fall through all these major support lines of the moving averages? But what I did on this trade was I waited, and this is part of my new strategy, which I'm really enjoying. And you can't really time the bottom, right? But you can make an educated guess. So I've drawn a trend line in here, and a trend line is something that basically connects at least 3 points to have any kind of validity. You can see I've got kind of 1, 2, 3, 4, 5, 6, 7 points here. And this was roughly where I was expecting it to come back. And so I got in here, I've got a note, I like put notes in Trade Vision just to remind me what's happening. So I bought 300 shares at 1073, which I guess is about $3,000. And I bought in here on this opening day. I don't watch the stock market live. I find it A, very stressful, and B, very distracting, and C, I don't have time to watch the stock market, and D, I'm not in America. So I'm not going to stay up at 2 in the morning to watch the stock market. But I find for me personally that this works, and I don't want to be watching the stock market. You know, I've got a family and a wife and a job and lots of things to do, so I don't want to be watching the stock market. I've done it before and it's not very interesting. In fact, it's super boring. And I found that for me it works. I don't need to move to America. So what happened here was I'm thinking, I like this pullback. I'm gonna put a small discovery price deposit of cash in here, not my full capital, but I'm going to put a deposit in here and see where it goes from here. So the day I bought, it dropped. There's a little percentage calculator here. The day I bought it, it dropped 5%. No big deal. My stop loss is at 20. So when I buy at 1073, let's call it $10, I basically put a stop loss down at 8. And as you can see, that's miles away from where it went. So you've got a huge amount. You could do 10% if you wanted, whatever your risk and reward appetite is. You know, whatever makes you comfortable, whatever makes you sleep at night. I'm happy to lose 20% on $3,000. Let's call it $600. I don't mind that. It's worth the risk. All investment has risk, as we know. Not financial advice. Do your own research. You know what I'm saying. So this is just how I trade. You don't just copy me, but hopefully I can teach you some things about what I've learned from all the many hundreds of stock courses I've been on. So you could reasonably get in there and put a 10%. So we'll call it 1073, we'll call it $1.70. So a dollar would be 970 somewhere. So that would be around there. And you still would have made it. It still would have come back. So it was a pretty good trade. And from there, what are we looking at? So if you bought at the very bottom, which I didn't, we're not even going to look at that. I bought in here, and 1, 2, 3, 4 days. We're now looking at 15% profit in 4 days. 15% profit in 4 days. What's 15% of 3,000? You could call it $450. $450 in 3 days for doing nothing. You wake up one morning and it's popped. It's extraordinary. The New York Stock Exchange is a cash machine. It's an ATM. And if you follow your rules, there will be losses. If you follow your rules, the losses will be small and the wins will be ginormous. So I could have gotten out the next day. I could have gone, oh, there's a big pop. I'll take the 450, thanks very much. But I've not, because I'm hanging on to it. I've drawn this trend line. I feel quite confident. The 20-day moving average is zipping along nicely. It's kind of going to go along here. What I think it's going to do is, can I use this pen tool? I've never used it before. Does it work? Let's try. Oh yeah. I think it's probably going to do something like this. And it might do something like that, I think, possibly. That's my prediction. And it's a prediction, it's not a promise. I think that's what it's going to do. It might just collapse and I'll be out on my stop loss here. I'll be out and I'll say, okay, on to the next one. I don't think it's going to do that. I think it's probably going to keep climbing. It's looking pretty strong. You'll see on the down days, which is great, the down days where it collapses, not collapses, but just has a natural healthy pullback, the volume also kind of drops a little bit. And so that's what we want, right? We want to see these big pops like that. And that's healthy and normal and natural, and that's what we should be looking for. In terms of the MRSI, the RSI is just a very simple, how do I get out of this thing? I don't know. So unprofessional. Can you just, you would think that I would just click on it and it would disappear, but no. Great, okay, maybe we'll come back to the MRSI another time then. Can I escape? Oh yeah, you can, great. So the MRSI is kind of an interesting thing. So it's just to tell you when something is overbought, basically. Like if I bought in here, as I would have typically done years ago, it's saying to you over here on the right hand side, you can see the values of the MRSI. And if I buy here, you know, it's going to come back down. 80, anything in the 80 mark is not sustainable, so it's going to come back down. And I just happened to buy on the day that it's at its very bottom, which was fantastic. If we zoom out a little bit, you can see, you know, you can tell when it's kind of overbought. It's way up in the 70s and 80s, and it's only going to come back down from there. So we tend to not buy up at the tops, right? Because it's going to take longer to make money. If you bought at the top there, how long are you going to have to wait? 16th of October, pop. 19th November, October, November. So you're waiting 2 months to get your break even back again. And it's no fun owning a stock down there. You think, oh dear man, we're so far away from that moving average. So timing is extremely important. I'm very happy with the CGEM trade. Caught it right here, which is amazing. Oh, sorry, there. And it pops straight after, very rewarding and exciting, and volume is kind of tending to trail off now. So let's see what happens. We'll come back to it maybe end of the week next week. Let's check out IHRT. So as you can see, very similar sort of cookie cutter chart pattern we're working with here. I mean, look at this. Where was it? Where was it a few months ago? It was trading way up at whatever o'clock, 27 bucks back in 21. And if you bought here and held it, sad face, emoticon. It's not cool, is it? So if I zoom in here, and I'll show you how I find these trades in a second or two. Let's just spread it out a little bit. Look at this beauty. What a beautiful chart. I could look at charts all day. Sometimes I do. So we've got a little bit happening here, and here's the big pop. As I said before, normally I would get in there, but I've been revising and increasing my patience. Earnings, they had a terrible earnings, missed it by only 4,200%. But I'm not too bothered about the earnings because as you see here in the volume in the top left, if we go up here, if I roll across these, 420,000, okay? It's a tiny little small cap. Most people don't trade these because they're too volatile, but I like the volatility. It doesn't faze me at all. So we're looking at, let's call it 500,000 regular volume, and here someone drops 24 million